Hello all, welcome back to Financial Freedom and Odyssey.com. My name is Mark and I'm here today with another video. Today we're going to jump into portfolio updates that I made in the month of February for 2025. This is the 6th month in a row that I've done this portfolio update. Let's dive right in. Starting off, as always, with the major indices versus my RRSP. The majority of February was an upward trend, and not so much for the last week of February. What little gain VTI had on the S&P 500 or VO from last month, it gave up this month, unfortunately. And once again, I'm still considering switching VOO over VTI. And this morning, I actually had a thought that perhaps if there's a big market correction and the NASDAQ or QQQ overcorrected, it might make sense to switch all the funds over there. But that kind of goes against my just long-term buy and hold strategy. So I'm unlikely to do it, but we will see. Index-wise, TSX is the only one that was up on the month. And in my RRSP, SCHD by a fairly large margin, followed by VDY, which is a portion of the TSX, so that makes sense. XAW has majority in US stocks, so if all the major US indices were down, makes sense that that's down. And then same with the VTI. Jumping into the moves that I made. February, as always, February and March, because it's tax time here, it seems to be quite busy. And this one was definitely no different. If you hadn't taken a look, I have an article that I posted last week, which is reviewing the single stocks that I have in my portfolio and my thoughts for their future in my portfolio. So I will be submitting our tax soon, and we're looking forward to a decent return once again. As noted here, is mostly due to self-directed RSP contributions. I do have a little bit of student loans, but they've paused the federal taxes, so yeah, you're not getting much of a benefit there in terms of interest savings, but you're definitely getting a huge benefit that they're not charging you interest and that sort of thing. One thing to note is I did sell a bit of crypto earlier on in the year, and unfortunately the CRA is not ready to handle any returns that have capital gains yet, so I have to wait until they open it for people who have capital gains. Now, if the market continues to decline, on data recording here, March 3rd, has increased today over last week's huge sell-off, let's say. So yeah, if it continues to do that, this, blocking me from filing my taxes and investing my return will be a blessing in disguise. If not, it's the way she goes. So specifically looking at the TFSA, I, as always, manually dripped my SPLT. I really wish that in Wealthsimple you could turn drip on for an individual stock within the app. Right now, I believe it's still just on your entire portfolio, which I don't really want to do just yet. I want to still try to pick and choose a little bit and get to my target percentages for each holding. I swapped PSA for PREF. So PSA is a high interest saving account ETF that I've talked about before, and PREF is, I believe that's a Quadravest one. There's a couple of similar ETFs, and essentially what they do is they hold a basket of preferred split share funds. So as I noted here, a few months ago, I swapped cash for SPLT, which has been fantastic. SPLT has been paying out about a 6% dividend, I believe, distribution technically, with the stock price just up and to the right very gradually, but still up and to the right. So it's definitely been a fantastic choice so far. So I decided to do the same thing with the remainder of my HISA or high interest saving accounts ETFs, and keeping it separate just for diversification. And I chose PREF this time. As part of my normal buys, I added to VDY in QQCL. I slightly increased Utes. Still feeling that one out. See if I want it to be a long-term holding. Big news. And again, if you would have read my article last week, you already know this. I sold it completely out of ATD or Element de Couche-Tard and put the proceeds straight into VDY. Now, at the end of the month, after that drop that I've been talking about, I decided to use some of my funds that were allocated into Pref, which is kind of, it's like my emergency fund, more or less. We do have SPLT. I do have some, just cash in other accounts and that sort of thing. So yeah, it has a twofold. It's like extra emergency fund / just kind of a cash reserve if I see an opportunity in the market. And I believe Google and AMD are both a pretty good opportunity. So midway through the week, I bought some on February 26th, and then it dropped even further, and I bought some on February 28th. And as I go into detail here, essentially I think they're extremely undervalued. I've listened to both earning calls for for Google and AMD, and they've been talked about by a lot of the financial YouTubers, which doesn't necessarily mean that it's good or not, but I'm starting to agree. So I decided to add a very small position. So I have signed myself up to, let's say, the responsibility of, if I'm going to own single stocks, I must ensure they're really undervalued, or I have a good hypothesis against them, like they have some sort of advantage for some reason. And the other thing is I must listen to the earnings calls. This is just kind of a part of ensuring that I follow the individual stocks more closely, which I haven't always done in the past. And once again, I decided to allocate some of my investable funds. Instead of putting in the TFSA, I put some against the line of credit used by bank. And I alluded to this last month, but my teaser rate has actually ran out now, and I haven't received another teaser rate. That's on an unsecured line of credit. We don't have a HELOC, so the rate is quite high. Although it is not as high as bank's dividend or distribution. So if I needed to pull the funds away, I could do that to carry it. Looking at the actual breakdown, there's no more ATD on this side. And Utes is now big enough that you can actually, it's not just a line, very small triangle there. But yeah, so Pref is going to be a little bit smaller than PSA. Like I said, I sold some off. I did not put Google or AMD on here yet. Not sure if they're going to be a long-term hold or not. That'll just depend on how quickly they go up or down, or essentially what they do. I may, do a shorter term trade, or they may be a longer term hold. We will see. Yeah, I've called this out many times, but Tardy Bank was purchased on the line of credit, which I'm working on paying off, and SPLT is our joint emergency, part of our joint emergency savings. So I shouldn't really touch them, and I don't really plan on, allocating them anywhere else. And positions that I'm still thinking about consolidating: AQN. Not sure yet. Their earnings call is on Friday, March the 7th. So at the time of this video being released, it would have been released last Friday. But yeah, we will see. Maybe at that time we'll have sold it. And TELUS, it's been doing well. I'm going to hold it. And once it gets to a position where I feel like selling it, I'm still planning on dumping some into Utes and the rest into bank. Breaking out each TFSA account, I have my primary TFSA account here, and my secondary TFSA account here. I think I talked about it before, but the whole idea at first behind my secondary TFSA account was going to be just stocks to drip, and my primary was going to be one where I just manually allocated the distributions that came in. But anyways, they're just nice to kind of split your funds across multiple accounts, just as security, right? Moving on to the RSP. As per usual, RSP, pretty straightforward. I just purchased one position and I decided to go with XAW this month. And in March, I'm still planning on putting a large chunk in SCHD. Not sure if I'll add to any others or just straight SCHD, but we will see. In the dividends increase and decrease category, we actually have some action here. So Hamilton raised dividends on many of their ETFs. I only hold 2 of them, and luckily they did increase dividends on both of those that I own. That's HYLD. It went from 0.143 to 0.145, so not much there. And HDIV, even less. Went from 0.171 to 0.172, so small, but if you have a lot of shares, it adds up, which I don't. But, you know, eventually we'll get there. QQCL was raised from 0.25 to 0.295, which is an incredible 18%. So just absolutely loving that. QQCL has really crushed it. I mean, I think it's at this point given me a better return than HXQ, especially in the short term. Although I've held HXQ a lot longer, so it's not completely fair. But anyways, I have QQCL now, and just because it's done that in the past doesn't mean it's going to do that in the future. And to wrap up, as we always do, the Fear and Greed Index. Actually, sorry, I just noticed this here before I jump into the Fear and Greed Index. March 21st is the date, so that's the 3rd Thursday of March, I think. Or, anyways, 3rd week of March, SCHD every year, they reconstitute, which means they kick out the underperformers and they try to find some new overperformers that they don't have. And yeah, we'll have to wait and see what happens for that. Now, back to the Fear and Greed Index. We are now in extreme fear. We haven't been in extreme fear for a good long while. I kind of want to say not since 2022. Like, we've been in extreme fear for a few days now, but yeah, I want to say probably 2022, maybe early 2023. So yeah, market volatility going up, which means we got to stick to our plan and no panic selling. And yeah, that's all for this week, folks, and hope to see you here for another video in the future. Again, I do these monthly updates every month, and this year, something new, I'm going to do quarterly reviews as well. Take care. Cheers.